welcome to another episode of the M&A Mastermind Podcast, your go-to source for latest industry trends and strategies to help you level up your M&A practice. I am your host, Nick Olsen, Managing Director of Cornerstone International Alliance. We are a group of lower middle market M&A firms. Here, the format for our podcast is I bring in a mastermind like today's guest who's experienced, knowledgeable, and gracious enough to share how they or he has succeeded in the world of M&A, and I'm really excited about today's guest. He is the founder and CEO of the largest online platform for M&A deal sourcing and marketing. I would imagine a lot of our viewers use this platform, and if not, I highly recommend that you check it out and learn more about that. He is a graduate from the Stanford University Business School, founded this company over 10 years ago. If you haven't guessed who it is already, my guest is CEO and founder of Axial, Peter Lehrman. Peter, how you doing?
I'm doing well, Nick. Thank you for inviting me on.
Yeah, well, I'm really excited to have you on the show today. We've known each other for a while and have collaborated in the past, and really excited to have you on here. So wanted to dive in, real quick, and excited for the conversation today. But you founded Axial over 10 years ago. Tell us, and maybe if you give us a brief background what you did pre, Axial, and then why you founded this platform and what problem you think it helped in the M&A industry.
So I spent my thanks again, Nick, for having me on. I'll give the long story concisely. I was Virginia undergrad and came out of Virginia in 2001. When people ask me, I always say I'm like perfect at timing massive bear markets in terms of when I've graduated from school. So I graduated in May of 2001. The internet was dead, and all of the investment banking and IPO markets were dead. I barely even think there was an investment banking hiring class that year from the big investment banks. It turned out to be really lucky. I ended up joining my brother Thomas, who had started a business in New York called Gerson Lehrman Group, which is now referred to as GLG. And GLG delivered information and experts to professional investors who were buying and selling stocks and bonds. So it was an information services business selling to investors in public companies. And I learned all about that and was part of that business for 6 or 7 years before I went to graduate school. When I went to graduate school, I learned about private equity, and all these friends who were already in private equity, and all the cool kids were in private equity. And so I sort of scrambled to try and find. I had a very non-traditional resume, but I scrambled my way to find an internship in private equity, and began to learn about how information flowed in private equity markets as opposed to public equity markets. And that's when I learned about deal sourcing and how deal sourcing is this thing in the private markets that doesn't really exist in the public markets. You don't need to meet a CEO in order to buy their stock in a publicly traded company or buy their bonds. And you can never close a transaction with a privately held company without a relationship with the owner. This is fundamentally different the way the markets work. And so deal sourcing is this huge area of challenge, expertise, opportunity for advantage in private markets in a way that it really is not in public markets. And so I worked at this firm, when I was in graduate school during the year, and then in the summer between year 1 and year 2. And then Axial ended up being what I started after that. So I almost went to go work for them. It's a fantastic group of guys investing in lower middle market companies based out of New York City and a suburb outside of New York. But at the end of the day, I guess I just decided that trying to start a company and trying to build a business was a better fit for me than becoming an investor. So, that was 2009. I just celebrated my 15th anniversary in this chapter building Axial. So I've been working on it for a long time now.
I appreciate the context there, and I love the journey there. So Axial, tell us all about this platform and what it does, what it tracks, how it helps investors and, sell
Hmm.
side M&A advisors. How does that, why should we all be on this platform?
Well, I know you've got a lot of investment banking professionals as listeners, and I know that's your audience. So I'll spend more time maybe talking about that than I will the
Yeah.
buy side. I mean, in short, for a buy side professional, Axial is it's an origination channel, right? It's an origination platform for the buy side to find acquisition opportunities and to find acquisition opportunities that extend beyond the reach of their first party networks, right? The people that they already know and the channels and relationships that they already have. So that's how the buy side looks at it is, I have all these potential channels and all these avenues that I need to walk down in order to find opportunities, and which ones am I going to walk down? And Axial competes in a world with a ton of alternatives there. For an investment banker on the sell side, Axial is effectively a marketing partner for you, and it's a marketing partner in a few ways. It really all starts with deal marketing and using Axial to make sure you're driving the best process for your client who's selling their business. We give you data and tools about the most likely, most relevant buyers for any given business that you are either potentially going to take to market or you have already received the assignment. So we've got a marketing platform for the sell side. It helps them discover new buyers. It helps them reach out to buyers. And every buyer that's on the Axial platform has been vetted and reviewed and onboarded by Axial. So it is not something where anybody can just sort of sign up and get underway. It's not an online bulletin board. So we try and build a stronger marketing partner oriented solution for sell side investment bankers selling roughly $5 to $100 million businesses. And that was kind of day one on the sell side for us. Over the course of time, we have tried to be an even more valuable marketing partner to the sell side. And the two ways that we do that is through benchmarking. And we can talk a little bit about that, but we try to rate and benchmark the sell side on an industry basis and publish league tables on the activity and the proficiency of the investment bankers that use our platform. And the benchmarking turns into awards and other kinds of business development mechanisms for the sell side to be able to distinguish themselves when they're competing for business, to win over a business owner who's evaluating a couple different investment bankers to sell his or her business. And then the third sort of leg of the stool on the investment banking side is referrals. So members on the sell side who are repeat users of Axial essentially establish an expertise profile. And as business owners come to Axial and ask for introductions to M&A advisors, we refer them to the most active and most qualified M&A advisors that are using our platform. So if you're a specialist in selling industrial businesses, you have a track record of doing that really well, and we can see all of that data on the Axial platform, you kind of rise to the top as one of typically 2 to 3 referrals that we'll make. So it's sort of three-legged stool: benchmarking and ratings for marketing and promotion. The first is deal marketing and using our platform for your sell-side M&A transactions. And the third is sort of the benefit of all of that, which is referrals to business owners who are thinking about selling their business in the next 1 to 2 years. And we make a sort of private introduction between our members and the business owner when the stars align in terms of expertise and capability.
Yeah, I want to jump back to the marketing side of it, here a little bit, Peter. I know everyone has, their list, like we said, they're not the first level, and they have their process of how they're going to go to market on a deal. It just seems naturally that, you're still running your own process, right? Everybody's doing what they normally do, but to add on a tool and a resource like Axial, you're only exposing your deal to more opportunities. Why not? That seems like a lot better than just, the more is better. More eyes on your deal is better. You guys help with that. seems like a logical thing to do.
I mean, it's interesting, right? I think more is maybe roughly speaking better. I think more quality is better. I think more is probably not better. I'd say more quality is better than less amounts of quality, right? I think, and so we as a platform, have way fewer users and way less traffic than the sort of bulletin board, internet business for sale classified sites. Those are not. We don't view those as a real competitor to us. They're much bigger. They have way larger number of users, way more traffic. So we don't really stand a chance at them in terms of just pure scale and numbers. I think what we try to be much more effective at is two things. One, we try to be much, much more valuable in terms of who we've attracted to the Axial platform. So everybody who's on the Axial platform is interviewed, evaluated, and qualified and onboarded. They all are attesting to being accredited investors or qualified buyers of companies, according to SEC definitions. And in almost every case, they either have an existing track record of executing transactions, or they have been part of organizations where the organization has a history of executing transactions, and so that's very different than than just going for the largest number, right? And so I think there's a place for both. But I think that's where we've tried to focus is what is the amount of quality. I'd say the other area that matters a lot to some of the sell side firms that we work with, and typically it's because of the owners and the owners' preferences. A lot of times they want to do very, very secretive sell side processes. And so Axial does not require you to post anything. There's no posting on Axial. There's no bulletin board process. You get to choose as the sell side banker in partnership with your client, who do you reach out to? You get to see who we're recommending. You get to look at them line by line. You can see this is a family office. This is a committed capital private equity firm. This is a search fund. This is a strategic buyer. You can see all the names. You're not just uploading your data and then posting it and saying, whoever wants to see this, who has access to the internet, can see this information. You have a lot more agency over how you run the process. For really small Main Street deals, that's actually not a very good feature. For businesses worth 20, 30, 40, $15 million, that's a crucial feature. Like that's a very, very important feature. So anyway, we're focused on trying to drive a lot of great quality into the process and trying to make sure that the sell side and the owner have a lot of control over how narrow or broad the process is. I think that's where we try and differentiate from a feature perspective.
Yeah, no, I really appreciate that clarification. And you're right. Quality is better. Our clients do want to have that confidentiality component. So not just blasting it out to the masses. Appreciate you clarifying that. And that is a huge benefit to being on your platform because there is that confidentiality. And yeah, like you hit on it. You don't always want to get in front of more just because it's more. You want to get in front of more quality that could turn into prospects and good buyers. And you guys vetting your buyers is we do that with our members. We want to vet our members kind of in the same way. We want quality and we want the right people and people that are going to execute and collaborate. And I would imagine it's kind of in our different worlds, similar to how we bring on people into our groups. Do you guys do any sort of vetting? I know, like you said, you got the league tables, which we'll get into in a minute, but which and we were talking offline beforehand on just the quality of even sell side M&A advisory firms. Do you do any vetting on the front end for the sell side as well, just to make sure that the deals that they bring to your platform are quality deals?
Well, the answer is kind of yes. We do have some things that we require. So from a financial criteria perspective, the sort of approved criteria for Axial are businesses generating in excess of 5 million in trailing 12-month or last calendar year revenues. or businesses generating in excess of $500,000 of EBITDA. So that's kind of the floor from a financial profile perspective. We don't rate and vet advisors in terms of, like the quality of their transaction processes, and we don't ban people who do things in a way that some of our members, we don't like that approach. We do have a rating system. We have we also have an ability to block members, so you can block members that you don't want to transact with going forward. But we don't like the idea of, sort of blocking people from using Axial on the sell side, just because they don't have like a certain level of pedigree as sell side investment professionals. And I'd say the reason for that is because just listening to our customers, frankly, on the buy side, we obviously have customers on both sides of the platform, but our customers on the buy side would prefer to work with a professional, well-organized sell-side intermediary. It makes their lives easier, but they don't have a desire or a preference to, to block or ban or not do business with brokers who do things in a way that they don't love. At the end of the day, acquirers are looking at the underlying asset that's being sold, and what is that business, and what's that team like, and what is that team trying to achieve, and what kind of, investment return case can we envision here? And so, the sell side broker or banker, while we're, certainly keeping track of their behavior and their activity and helping the market, with ratings data and information on that, we measure their responsiveness. We indicate whether they use digital NDAs or not. We indicate whether they've uploaded a SIM. So we have these markers of professionalism, but we don't enforce or insist upon only one way to sell a business or, one type of pedigree that's acceptable. We don't think that's correct. Yeah.
Yeah, that makes sense. From I guess from the buyer's perspective as well, I'm assuming you guys have conversations, you and your team have conversations, with your buyers, right? Are you guys in constant communication on things that they're looking for in deals, and some, things that maybe you can share with our audience that will help them presenting the, maybe the right information, the right type of deals, or helping them understand the deals better from the buyer side?
I don't think it's, so first of all, yes, we have a lot of conversation. We have about 5,500 conversations every 90 days with our members. And that's both the sell side members and the buy side members. So while Axial is a software platform and it's an internet service, there is a really significant amount of relationships and interaction and conversation that we believe is integral to how we do business and how we support the market of members. So the answer is yes. We have a lot of conversations with a lot of members on the buy side and on the sell side, helping them make the most of the capability set. I would say that, I think the buy side there's a lot of breadth on the buy side, and when a breadth of preference. And so I do think that there's a couple things that, the buy side intuitively values, right? One, just good, well-written business descriptions really, really are valuable. I think looking at a business only by looking at like last 12 months of revenue and EBITDA, or last 12 months of revenue and seller discretionary earnings, it's not that that's unimportant. It's that it's really, really hard to know whether or not a business is interesting based upon, just like the industry that it's in and the last 12 months of revenue and the last 12 months of, of EBITDA. the business description really ends up being a place where I think the banker can distinguish themselves in terms of just presenting a story around the business, presenting clarity around the customer markets. I think the customer markets are really important. I think, knowing, is this a business that serves, one end market, or does it serve a whole horizontal set of end markets? Is it a business that serves pharmaceutical and aerospace and petrochemical, or is it like a business that's, very specifically tied like only to home building? And those things really matter, because those kinds of customer attributes just create a lot of visibility for the buy side on whether this is a good fit for them or not. I think so. Business description is a place where we see a lot of opportunity and a lot of value either being created or a lot of opportunity being missed. And what ends up happening is, I think sometimes the sell side realizes, well, like, if they're interested, like, they'll spend the time to have the conversation, and they'll dig in a little bit more deeply on this. I think sometimes that's true, but I think sometimes it's not true. I think if the initial summary of the business is not sufficiently clear, I think what ends up happening is a meaningful portion of the buy side says, well, in the presence of all these other alternatives that I have, all these other, potential deals that I'm going to look at, my eye is going to wander more towards those businesses where I have faster visibility on just the like basic nuts and bolts of the opportunity. And so, everybody's distracted. Everybody's getting pinged by a million apps these days. I think that initial hook, that initial summary of the business, it's like you really have to put your marketing hat on as an investment banker and really think about how do you capture somebody's attention, and how do you signal that this is a business that's going to be professionally represented. So I just wouldn't underestimate the value that can be created at the top of the funnel with really good teasers. I think I see a lot of variation between M&A advisors in terms of adoption of like digital document execution. I see some brokers and bankers who are like, nope, we like to do, offline documents because it introduces friction into the process. And we want to sort of see, buyers climbing a couple of hurdles in order to pursue the deal. Other folks are like, nope, that's not the right place to create the friction. I'm going to be 100% digital with my NDAs. I'm going to be 100% digital with my SIMs. I'm going to create the friction, further down the funnel. I think there's a lot of different ways to approach those decisions effectively and successfully. But I do think that a really well packaged anonymous summary at the top of the funnel goes a really long way.
That's really good advice, because you do have to stand out, against a lot of other opportunities that these buyers are looking at. And to your point, they're just going to gloss over the ones that don't catch their eye right away. So be attention grabbing and catch their eye and have them look at it.
Yeah, that's right. I think another thing that's helpful for buyers to know from the sell side is like what the sell side's process is going to be. So one of the things that we see a lot sometimes happen on Axial is like the sell side will, go to market. Axial will be their marketing partner on a particular deal. They'll approach some set of buyers via Axial. They'll use like a digital NDA. And then they will, after the NDA gets signed, they will at that point they will vet the buyer and determine whether or not the buyer should get the SIM and should sort of be invited into like a more active dialogue. And sometimes that really frustrates the buyers because they don't want to sign an NDA, which is legally binding, and then not hear from the sell side, or not get the SIM. So I think just clarity on what is your process. When are you going to vet me as the buyer? When are you going to determine whether or not, I'm appropriate to sort of, bring into the initial process? Are we going to do this before the NDA or after the NDA? Just transparency a little bit on how you run the process, because the buy side experiences all this variation and process. And so when the sell side is transparent about that, I think the buy side really appreciates it. It's a real mark of professionalism that I think the buy side can pick up on.
Yeah, that's also really good advice. Yeah, lay it all out in the front, be transparent, and this is the journey that we're going down, and this is how it's going to
Yeah,
happen.
exactly.
Awesome. Any industry, looking back, maybe in 23, maybe looking forward a little bit, I don't know. Any industries that you guys have seen that are, I guess, quote unquote, hot industries? If maybe industries that your buyers are looking more towards, or any, on the flip side, anything to maybe, that aren't so hot.
Yeah, I mean, I would say, I mean, one of the interesting industries that, this doesn't happen very often, but one of the interesting industries that has a lot of activity and it's picked up in the last couple of years, I would say. And it's interesting, it's picked up in the world of small business acquisitions, and it's also quite an interesting area of venture capital investing is vertical software businesses. Vertical market software business. In fact, I think there was a cornerstone transaction via Axial in the fourth quarter of last year. That was it was a ERP style vertical market ERP business that
Hmm.
Cornerstone brought to market through Axial and transacted with an Axial software buyer. And we're seeing significant interest in that category. And usually what's interesting in sort of the world of small business acquisitions and lower middle market acquisitions is like the complete opposite of what is interesting and fashionable in the world of like high growth venture capital. This is like a strange uh like anomaly of a category where there is a set of very high growth emerging sort of rapid growth vertical market software businesses that have gotten the attention of like venture capital ecosystems and stuff like that. A good example of one that's now publicly traded is Toast, which is the software system that powers a lot of restaurants. Um, and then there are these small business, lower middle market software businesses that are not rapid growth, and they're not going to be, multi-hundred million or multi-billion dollar businesses, but they're very powerful, very, very deeply entrenched niche software businesses, and some really successful acquisitions, consolidations, and portfolio companies have gotten built in that category. So it's interesting to see a category that has a lot of VC interest in sort of one spectrum, and then also happens to be a place where there's a significant amount of interest in the lower middle market. Healthcare is very very interesting right now, and very active right now in terms of like an area with significant interest, very high um, pursuit rates. Pursuit rate is a term we use at Axial. So if you share a deal with 50 members or 25 members, the pursuit rate is the number that signed the NDA and want access to the SIM. We see some of the highest pursuit rates on the platform right now in healthcare, vertical market software, and a couple of industrial categories. The lowest area of interest right now has been sort of like food and hospitality, sort of food, beverage, and hospitality. Um, but I wouldn't make like those are that data is true, but I'm not sure it's like wildly predictive. There are some fantastic food businesses and ingredient businesses. There are some perfectly successful hospitality businesses that could very successfully transact. And so, I often find that the sort of generalizations and prognostications that are tempting to always make, like, in any financial market, yeah, I've found that it just, at the end of the day, all of these, it's kind of like real estate, like every situation is different. The house down the street sells, and maybe that means something, but it probably doesn't mean a whole lot as it pertains to your house. Yeah, every business is super different. There might be some hospitality businesses that are really attractive and others that are, out of favor. So it's very situational. So it's hard to make generalizations that are helpful.
Well, I appreciate your effort there. I thought that was very helpful insight.
Yeah, the software one is an interesting, observation, that we've made. I think the healthcare category is interesting for some pretty big secular reasons as well as for some cyclical reasons. I think people continue to feel like there is this chance of a recession. There is still this chance out there. Like we've kind of kept on sort of kicking the can for some reason. Like the U.S. has been able to not go into a recession, but I think there's still this fear that it's potentially out there. And so I think that creates an interest in categories that are more, immune to those kinds of cycles. I think healthcare also just keeps on, becoming a bigger and bigger percentage of American GDP. It's just kind of like keeps on swallowing more and more GDP, keeps on getting more and more expensive. There's, more and more regulatory capture. And those might not be great things for our country from a policy perspective, but as an investor, some of those things create really predictable, very underwritable business cases. And so I think it makes it quite attractive from that perspective.
I thought that was great insight. I appreciate you diving into that. Now you mentioned previously, you mentioned the marketing opportunity, the tools that you guys have. One, marketing your deal. Two is your league tables. You guys just recently came out with your 2023 top 25 investment bank firms. I will say a couple of Cornerstone International Alliance members on there, so I thought that was cool to see. And tell us about that and why that's beneficial to these firms, because I do think it can be a huge marketing tool for future business.
Yeah, I mean, the way that we started this project off, which is 4 or 5 years old now, is we realized that like if you go to Google and you punch in investment bank league tables as a business owner, you're going to see Goldman Sachs, JP Morgan, Morgan Stanley, and if you're running a 5, 10, 20, 30, $50 million valued business, those league tables as a way to try and maybe filter out like who could be some good investment banks that would help you sell your business. Those league tables just are completely unhelpful to you, right? And so we just realized that there was no methodology that was trying to rate and rank and create some visibility on who are the investment banks that are selling lower middle market American companies. It was just kind of white space. Nobody had spent the time to gather the data and try and do it in a good faith way. And so we were like, well, we don't have all of the data from our market. In fact, far from it. We only have the data on the investment banks that are using our platform, for deal marketing. But at least we can, but that's a big data set now. We have well over 1,000, investment banking organizations using the Axial platform. Let's just start there. And so the league tables rank the top 25 over any given period of time. The league tables attempt to rank the top 25 investment banks who are using the Axial platform. So we don't attempt to rate the entire market and include everybody. It's very hard for us to do that. So we just focus on folks who are using the Axial platform, and we use that as our data set. And we measure the banks on client quality, buy-side targeting, process effectiveness, and deal outcomes. So we have sort of 4 pretty logical sort of things that we try and use to rank banks. Client quality is what is the relative attractiveness of this business when you present it to buyers? Like how many buyers are interested? If you present it to 20, do you get 10 that are interested? Do you get 20 that are interested? Just what is the percentage of interest relative to the width and breadth of your outreach? Buy-side targeting is just a reflection of how you're going to market. How are you approaching the market? Do you just sort of like click the button and select everybody and let it ride? Or do you have a more methodical approach to how you reach out to buyers, and maybe you reach out in waves, or you reach out on a more targeted basis? Process effectiveness is looking at how responsive you are to the buyers, your use of digital tools on Axial, digital NDAs, digital SIMs, and then what is your sort of organization of the funnel and the process post SIM? So, bid submissions and how many bids and, just your organizational process there. And then deal outcome is pretty straightforward, right? It's, did this deal close and how long did it take for the deal close and how long was it in the market? So 4 areas that we can measure. We can measure all of them empirically based upon the platform that we have. And we rank the top 25, and then we have like a bunch of honorable mention categories as well. And the honorable mention categories are for firms that have done a really, really good job in one of those 4 categories or more, but just didn't make the top 25. So roughly speaking, every quarter, there's about 75 firms that are mentioned. And then at the end of the year, we do an annualized league table, which is what just came out last week, which looks at the total amount of usage over the course of a 365-day period.
Yeah, because you do one quarterly too, right?
Yeah, we do the quarterly one, and then the one that happens at the end of the year is an annual one. And then we just try and really put our Axial's weight and marketing, sort of megaphone behind it. So we have, I think 11,000 followers on LinkedIn. We have about 75,000 subscribers to the Axial online publication, Middle Market Review. And so once we've published the league tables, we create badges, we create signature embeds, and we create like this press kit for each of the recipients, and they can use that kit in their pitches to business owners, and they can use that to issue their own press releases. But it's obviously not operating at the scale of like a JD Power and Associates or something like that. But our goal is to try and really create good visibility on who are the professionals selling businesses in the lower middle market who are doing a nice job, taking the process seriously, and creating great outcomes for business owners, and taking an opportunity to recognize and celebrate the folks that are doing a great job at that.
Yeah, I mean, you hit all the points that, when we're looking at selling, hopefully we check all those boxes. Just as general M&A advisors, as advisory firms, we're doing the best job we can for our clients. And I think you guys did a really good job of identifying the key components to that. And I know just talking with our group, firms in our group that have won that award from us, they like to leverage those badges, to promote their firms. And you talked about referral sources down the road too, that, obviously, if you're on that list, you're higher on your list to refer out, but also referral sources from elsewhere too. That these people are on Axial's top 25 list. They got to be doing something right. They got to be a good firm. Those are the kind of people that we want to work with.
Yeah, that's what we're hoping for, right? We're hoping to. That's why I say we're trying to be as holistic and comprehensive a marketing partner as we can be to the sell side M&A profession. And that starts with the tools to market deals and market them professionally and carefully to buyers on the Axial platform. But ideally, that's kind of like a circular relationship where you're using the platform to market deals. That's creating a profile of record on your firm and the quality of your firm's work and the deal making execution outcomes that you can deliver. And then that puts us in a position to help you market yourself and to refer new business your way. And, hopefully we can just kind of do that, better and better and better as the product matures and as we grow the sort of trustworthiness of the Axial brand.
Yeah. I do. I think it's the trustworthiness, in my opinion, from just seeing it within the industry is very strong. I know you guys have a lot of users, and I think they really, really value those recognitions. So thank you guys for doing that.
Well, I have to say, like 15 years in, it's really satisfying to have earned some of the trust that I think we've earned. I will tell you that when I was 1 year in, there wasn't a whole lot of there wasn't a whole lot of trust, and I understand that. This is a very high trust business, and and if you're an investment bank and you're entrusted to sell a business, all of your economic outcome is tied to whether or not you successfully sell the business or not. Yes, of course, you may take a retainer or something like that, but the good investment banks make all their money by delivering great outcomes and closing deals. And so, being careful about who your marketing partners are, being careful about what platforms you use, being careful about, just everything about how you go about selling companies. Like it makes sense to be cautious and careful and to, choose your partners and your vendors wisely because, these are really high trust transactions. You don't close a lot of deals each year. It's not like you get 100 chances each year as an investment banker. You get like somewhere between, I don't know, 2 and 5, per managing director, maybe 1 to 3. So, you need to have a really, when you step up to the plate, you really want to be connecting. So, so it makes sense that the industry takes its time, working with new tools, new partners, that it naturally takes its time in terms of selecting who it wants to partner with.
Exactly. Could not agree with you more there. Well, Peter, thank you so much for your time today. Appreciate you diving into your platform and all the nuances and benefits of getting your deals on there and all the marketing opportunities it provides us as investment banks, M&A advisory firms to not only expose our deal to more quality buyers, which I think is important, but just also getting your brand out there as an M&A advisory firm to more people. You guys do a great job at that. So thank you again, Peter, for joining us. Where can our listeners find more information about you, about Axial? How would they go about connecting with you guys to get on your platform?
So Axial.com, Axial.com is, it's an open site. There's a ton of resources there. You can look at all the league table data and stuff like that. No need for a login or password or anything. So I think that's a very easy place for people to go and just try and get a bit more acquainted with how we're working with buyers, how we're working with the sell side, how we work with business owners. If anybody wants to reach me, LinkedIn is usually a good way to get a hold of me. I'm actually pretty responsive there, usually 1 or 2 day or faster in terms of getting, back to people if anybody wants to reach out to me. So yeah, look forward to hearing from anybody if there's anything we can do. And thanks for having me on the podcast. I hope this hasn't been too much of a, no holds barred advertisement for Axial. I hope it's, hope your listeners have suffered through this with a couple of interesting nuggets at least. But I appreciate the opportunity a lot, Nick.
No, I think it was purposeful that we're talking all about your platform because I do see firsthand the value that it provides these M&A advisory firms, and the whole premise of the M&A Mastermind podcast is to share opportunities and ways to grow your own M&A practice, and I think we've accomplished that goal today, Peter. So again, thank you. Now you have your own podcast, right? Want to plug that?
Yeah, sure. I've got a podcast called Masters in Small Business M&A. It's definitely a labor of love. I've really enjoyed it. I've been doing it for about 3 years now. I try to interview a real mix of guests, and I try to interview folks who I think are really talented and very thoughtful and accomplished, but who, are not like known, like emerging, they're sort of up and coming. They're not like well-established all-stars that have been around for decades. I mean, I love to interview some of the known sort of all-stars in the lower middle market, but I think it's also really fun to try and go deeper and find the folks that are up and coming in the various career paths. So yeah, I do that. Publish once or twice a month. And I find that to be a lot of fun in addition to my day job.
Your podcast, if I remember correctly, is on Apple Podcasts, Spotify, right?
Yep. Yeah, it's on Apple, it's on Spotify. I think you can find it at least on one of those two. There's a lot of great podcasts, I think, in our market now that I would encourage people to be aware of. I've learned a lot from Invest Like the Best, which is a big podcast run by Patrick O'Shaughnessy. I think Alex Bridgman's done a great job with Think Like an Owner, which is an interesting podcast. There's a Holdco podcast now. There's just there's a lot of interesting ways to learn about the lower middle market and small business M&A market now. 15 years ago, when we were starting Axial, none of these things existed. Twitter was like a complete graveyard when it came to, conversations on small business ownership and acquisitions. Now it's a very robust community that's assembled itself on Twitter. So there's a lot of places where people can go today to learn and to ramp up without having to know anybody or have connections, or there's a lot of places you can go to like really educate yourself quickly if you're just curious and know how to use the internet.
Yeah,
that's a good thing.
Yep, I agree. Well, again, Peter, thank you so much for joining today. That's all we have for today's episode. Help Peter and myself out by liking, sharing, commenting, subscribing to this episode of the podcast. Share it with anybody who you think might find our conversation today beneficial. All of our podcast episodes are at cornerstoneia.com/podcast. Hopefully you found a couple of takeaways today, and our conversation was great. So Peter, thank you very much. And thank you for listening. Until next time, everyone, take care.